Hi Aishu, how are you? Good to see you. Foodies of India, Prerna, hi. Who else is here? We're just waiting for Saloni to join in. How's everyone doing? Hi, how are you, Saloni?
Hi, I'm good, Aanchal. How are you?
Good, good, good. What a lovely, colorful background you have. I'm looking at all the pictures. Are these all your travel pictures?
Yeah, so basically everywhere I go, I'll end up picking up a few from there.
Paintings and stuff. Very
Yeah,
nice,
that's my souvenir and my memory.
very nice, very nice. Mansi, hi. Nishit, hey, what's up? How are you doing? You saying hi from there? I'm saying hi to him in the chat. Okay, so we have a couple of minutes before we can dive into our chat. So we can just say hi to all our friends in the meantime. How's everyone doing this evening? Thank you very much for joining our chat. Welcome to Decoding Life with Aanchal. Good to see you guys here. We do a lot of fun chats every Tuesday, Thursdays, and very often on Saturdays as well at 4 p.m. And I think the next one that's coming up is also like a very interesting one. So please follow our page, share our page with your friends and family. Hi, Ashu. How are you? Good to see you. Uh, so, Saloni, let me begin with your intro first. And, or should we just wait a couple of minutes maybe? And let,
I think we can wait for a couple of minutes because it's not 4 yet. I think people are still joining
yeah,
in.
maybe we should just wait for a couple of minutes. I'm,
Yeah.
uh, I'm a little early on the chat today. So, hi, Afan. How are you? We are missing all your celebs at our studio. This lockdown has really bored us to that extent. Nice to see you on this chat. Hi, Babli Mamji. Kaksha Desai. That's probably a friend of yours. Hi, Kaksha. Is that huh? Okay, I got that right. And so yeah, sorry, I was telling you something. I forgot what I
Uh,
was saying. Nili has
yeah.
joined. Hi, Nili.
Not
So
yet.
okay, so I'm going to first do your intro quickly. And Saloni, just give me 1 second. I'm going to just try and put my phone on silent, which I haven't already. Okay, good. Okay, so Saloni Sanghvi Doshi is the founder of My Wealth Guide. It's a wealth management firm. She's also worked with Rakesh Jhunjhunwala and which was the other one you said? Sorry, I think I've forgotten. Sorry,
McKinsey, yeah.
McKinsey,
McKinsey.
McKinsey and Rakesh Jhunjhunwala. And she's also one of the first women CFA charter members. So that's pretty amazing. She's also family for me, a lovely person. She's a foodie. She runs an amazing food blog. She also travels all over the world by herself. And very passionate and enthusiastic about doing a lot of classes for fitness and dance as well. And very happy to have you here, Saloni. Thank you for accepting my invitation. Welcoming everyone to Decoding Life with Aanchal. Our chat for the session, how to make your money grow, basically. So, so yes, sorry, you wanted to say something.
Thank you just so much for having me here. I think I've seen some of your sessions and it's great the different kind of topics that you're picking up.
Thank you.
It's fantastic to see that.
Thank you. Hopefully, we can do a series on wealth creation. So I think that should be interesting. But let's dive right into it, Sal. What I really, this whole COVID period. Before we get into all the information that you want to share with us about investments, this COVID period has been very, very difficult for a lot of people, and a lot of people have struggled with their salaries. Hey, Rish, how are you? With their salaries, their steady incomes, and for people who've not necessarily had savings, right? In this entire phase, have also really faced this challenge, and I think this applies more for the younger generation who, I think we've been following. India traditionally has been a country where people are very big on savings, whereas we've
Right.
been going more the Western way these days about living life on EMIs and an aspirational life basically, whether it's cars, houses, travel, whatever. And I think this COVID has been a very, very difficult time for a lot of people. And it's great that I think this chat was the need of the hour. So Sal, what would you say to people who are trying to firstly struggle with trying to figure out how much of their money they should be spending, how much of their money they should be investing. Can you give us a quick lowdown on that first?
Okay, so I think it kind of depends from person to person, but I'll just give you a broad rule of thumb, for this. So, say, whatever you're earning, you should save as much of your age. So, say, for example, if you're 20, you should be saving at least 20% of your income. If you're 40, you should be saving at least 40% of your income.
Wow.
And I think more importantly is not just saving it, but what you do with it. So investing it. So I won't say save 20%, but I'll say invest 20%.
But what is this logic for coinciding it with your age decade? It's because you need more at that age, or is it what would...
It's basically a function of how much you earn, right? So for example, your salaries in your 20s are much lower. And
Right.
you have a lot of expenses that you kind of have to make. So
Right.
your propensity to kind of save at that age is slightly lower. But when you're 40, you've already achieved a lot in your professional life. So you're
Correct.
already earning a very good salary at that age. So broadly, that's the only idea. Also, secondly, the time that you have. So, for example, most people look at, say, retiring at 60.
Right.
So when you're 20 or 40 years, but when you're 40, you only have 20 years.
Correct. Correct.
So you need to put in more money for that.
Correct. And then what happens to Malini aunties here? Hello, auntie. How are you? And what happens to then what happens when you're stuck with a situation like this, an unusual situation where there are months at an end where you don't where you're not having any income stream for a lot of people who have not invested and not saved? What happens at that time then?
So I think obviously at that time, one thing is because in something like COVID, for a lot of people, there have been a lot of salary cuts and stuff.
Correct.
But on the flip side, because we're not going out as much and we're not doing as much, we're also saving more.
Right.
So net, what you kind of land up with would be again similar. But to say protect yourself from something like this in the future, you should have at least 3 to 6 months of your income minimum. Right. In a separate emergency fund. This emergency fund will, you could lose a job or you decide to quit your job for some reason and it takes you a few months to get another job. It could be anything. But, that's the basic amount of savings that you need in a separate emergency fund. And just one more thing I want to highlight is also medical insurance. Right. Make sure you have adequate medical insurance because today one of the largest expenditure is medical. Right. Medical is very expensive. One visit to the hospital will cost you multiples of lakhs.
Correct.
So make sure you're done that.
Right. And how do you draw this balance between trying to have a lot of people have this attitude that, we're making money right now and, we want to live for today and life is short and I want to spend and I want to be happy. What would you say to that? How do we draw a balance between what we make and what we aspire and wish to buy and spend? Apart from
I think, we get a lot about this that, okay, you should save. Saving is good, but as you said, it has to be a balance because if you're only going to save for when you retire, there's no motivation, right? Because you want to enjoy what you're earning and what you're making. So, there's this, I call it conscious spending. Okay. Basically take 2 or 3 or 4 things that really mean something to you that kind of give you happiness.
Right.
And splurge on those things. Don't think about it, spend whatever. Cut down on the other things because, in life, there are so many things we spend on that we kind of do it because our friends are doing it or it's expected at that age.
Of spending.
Yeah. So, and those are things we don't care about. Like, say, for example, for me, it's food and travel. So that is what brings me happiness. Yeah. I will spend all of my money on that versus, say, maybe a BMW.
Or bags or whatever. Yeah.
Yeah, exactly. Right.
Yeah.
So I think when you maintain that balance, you get to enjoy your money today, but you also get to plan for your future. So it's a win-win in both cases.
Right. Okay. So now let's just get down to a little bit of actually financial planning. Like, there are all kinds of investments today and it's quite confusing for an ordinary person. everything from like mutual funds, debt funds. There's so many terms thrown around. There's all of this call, put, options, futures. It's very confusing for people who are not in the finance business of it. What would your advice be in terms of spreading your portfolio?
Okay. So my first thing would be if you don't understand a product, don't invest in it.
Okay.
You should understand where your money is going, and either you make sure you understand it or you don't invest in it.
Okay.
That's first important thing. The second is you need a mix of various asset classes, because every year you will have a different, and by asset class I mean mostly debt, equity, and gold.
Okay.
So every year you will have a different asset class that outperforms. 1 year it could be equity, 1 year it could be debt, 1 year it could be gold. So the idea is to have a mix of three. Okay. Now, how much you put in each asset class again depends on your risk profile. Basically, how much risk you're willing to take.
Yeah.
And what you want to achieve in life financially. Say if you don't want too much, you don't need too much risk. But say if you want a lot more, you have to take higher risks to achieve that, right? So just to give you a broad, this is not something that's applicable to people, but just to kind of give you an idea. Say, for example, you're 25 years old.
Yeah.
So you can probably invest around 70% in equity,
Okay.
maybe 20% in debt, and 10% in gold.
Okay.
But if you're 50,
Yeah.
then you want safer assets, right? Because the peak of your earnings is kind of behind you.
Okay.
Right? So you
Yeah.
want to have safer assets because you would soon be retiring. You would not really be having an income.
Correct.
So in that case, you'd probably do like 40% in equity, maybe 50% in 45% in debt, and a 15% in gold.
Okay. Okay.
So this is just to kind of give you an idea. Obviously, it depends. Like, see, no people of the same age have the same risk profile.
Right.
And understanding, right? So again, it depends from individual to individual. This is just to give you a sense of how to kind of do it.
Right. I saw a very funny comment by Rishabh. He said his favorite method is cash under the pillow. Not anymore, Rishabh. I mean, that's really mean and nasty, but anyway. Okay, so Sal, what I wanted to ask is that, and I'm going to digress a little bit over here. Our Indian families are very big on jewelry and gold or whatever, and they're essentially always obviously non-performing assets, especially made jewelry, right? That the ones that we wear for fashion, diamonds, etc. And
Right.
what do you think about that? Because to be honest, right now in COVID, now I'm very against this whole. I feel that all your money should be invested in places which is actually giving you a return. But I think a lot of people who've stashed gold and cash during this time, their incomes have not taken a dip because the stock markets haven't fallen. And, if your money is invested, you haven't taken a hit. What do you say to people who save money in the form of cash and gold, and how much of that should be kept aside, basically?
Okay. So just to give you an example, between say cash, which is money in the bank, versus equity. Now, if you're investing for the short term, if you're putting in money for 1-2 years, then what you said, yeah, I mean, obviously right now equity markets are not doing well and cash is great.
Yeah.
But if you look at a slightly longer term perspective, let's take 10 lakhs that we've invested today.
Yeah.
In 20 years, that would become almost 1.5 crore.
Okay.
But if you just kept it in the bank, in your savings account,
yeah,
that 10 lakhs becomes only 20 lakhs.
Right.
So can you see the differential? It's 1.5 crores versus 20 lakhs.
Right.
Okay. So that is one very important reason why you invest in equity, because equity is the only asset that will beat inflation.
Right. But it's also high risk.
It's higher risk, but see, that's what I said. If you're looking at a 1-2 year perspective, 3-year perspective, then you should not put any money in equity because it's much more volatile. But if you're looking at a 5, 10, 20 year perspective, then that is where your money should go. And that is also where you will make real wealth, right? Because ultimately that's what you want. You don't want 5% and 6%, right? You want to make real wealth. You want to be a millionaire or a billionaire or whatever at the end of the day, right?
Correct.
And so in terms of jewelry and gold, so see, traditionally there were not too many places where you could invest in. You had real estate, you had insurance, and you had jewelry or gold.
Correct.
Now, I would not see jewelry as a form of investment, but more as a form of my expenditure. So,
Mm-hmm.
as I said, you spend money on travel or on luxury or whatever, your jewelry will be a part of that. Because, obviously when you get made jewelry, you're not going to get too much on that.
Correct. Correct.
But if you have gold in terms of, gold
Just
bars or biscuits or just gold, right? Or digital gold, you can look at that at 10 to 15% of your total portfolio,
yeah.
but not your entire
Correct.
portfolio.
Okay. Okay. And what is your opinion on property investments? Because there was a time in India where property was considered to be a very fine investment, higher rate of returns, high rentals, escalation of the price of the property over a period of time. Now, not so much. Do you think this is a phase? Do you think it's still very strong? What is your opinion on properties?
So I think again, properties is very subjective based on where, what, etc. But in general, I would not consider a property an investment.
Okay.
I would consider it. See, if you kind of just, if you put numbers between, say, buying a property versus renting,
Yeah.
renting is a no-brainer. But,
For commercial and for commercial and
no, this is more for residential.
okay.
Commercial, the numbers work out to be a little better, much better actually.
Okay.
Okay, but the thing is that as Indians,
for both, for residential and commercial, while you're at it.
okay, so basically, for example, say if you buy a residential property, the rent you're getting on that would be maybe 2%
annually. Okay.
Yeah, annually. So unless there is a major price increase, you're better off just putting that money in an FD and doing nothing with it. You're going to earn a lot more just doing that.
Right.
But that being said, see, in India, we are emotional about a house. So it is more from an emotional perspective where you want your house and you're buying it. So if you're buying it for self-consumption, it's fine as long as you're clear about that. Right. But if you're buying for investment, I think unless you have the edge and you know that, okay, this property is going to appreciate by 40-50% or something like that, then it makes sense, then that's great. But if you're investing in property just for rental, then it's not a great idea.
Right, right. And commercial?
Commercial is slightly better because you can get from 8 to 10% on those rates. But again, commercial is more fluctuating because, it's not always easy to have a steady tenant. I think that's a bigger problem with real estate. Like you might have a tenant, they go off after a few years and you have to find somebody. Also, secondly, if you have to ever sell or liquidate that property, it's very difficult. And you'd often have to do that when the market is not good, which makes it even more.
I think I'm facing this challenge, right? Right now, I'm very heavily invested in properties and it's nowhere close to 8 to 10%. And it's a huge challenge in this environment to be able to get a steady, good tenant. So yes, I fully. So, and tell me also about this whole commodity trading. There's so much being discussed about commodity trading and cryptocurrencies, because there is this whole conversation and buzz abroad about cryptocurrency being a very solid investment, and then again not, and whether it's really legal, not legal. What is your opinion on that?
So I think commodity trading, honestly, I am not the best.
1 second. I don't want to lose this question. Nirbhay, please hold your questions. Let us finish the chat. Let Saloni share all her information and then we'll take your questions at the end of the chat. So please hold on to that thought. That's a good question. We'll come to it. Sorry, Sal. Now go ahead.
Okay. So in terms of commodity trading, I'm not probably the best person to comment because I haven't studied it in as detail. But again, I think if it's something you understand, then you should do it. As I said before, if you understand it, go for it. If you don't, then be careful and stay away. Again, cryptocurrency, I think that is something I studied a few years back. And for me, I find it harder to trust any investment that doesn't have an underlying asset. So
Right.
if you look at any other, you look at currency, real estate, gold, stocks, debt, any other asset, there is an underlying asset that you're investing in.
Tangible asset, you mean?
Exactly.
Yeah.
In cryptocurrency, there is nothing, right? And I think one of the hypotheses was that it'll get mainstream acceptance, like you could go to your store and pay in cryptocurrency and stuff. That hasn't really happened yet.
Yeah.
So I feel it's more of a trading bet versus investment. So you understand it, you want to trade it, great. But I would not invest money in it because there is no tangible asset. There is no way to ascertain why the price would go up or down.
Is it acceptable in the stock markets world over? Cryptocurrency?
Also, India, no, it's still not completely mainstream. Also, in India, as far as I'm aware, it's illegal to kind of buy and sell cryptocurrencies. People have worked around for that, but yeah, I mean, it's illegal right now to do that.
Okay. And you shared a very interesting concept with me earlier on chat saying FIRE, which is financial independence and retire early. Please elaborate on this a little bit and explain to us how this is even possible.
So basically what has happened is now, there was a time when people would start working in a company, work probably in the same company till they were 60, 65, retire, and that was it. Today, that is no longer how we work. We, first of all, no longer work in the same company.
Yeah.
Neither do we have an aspiration of working till 60, 65 and then retiring.
Correct.
Right? So people are leaving corporate well-paying jobs much earlier to kind of do other things that they want to do in life. So the concept of FIRE is basically that you're financially independent, which doesn't mean that you've retired per se, but it means that you don't need to work for money.
Right.
You don't need that income for your life, which means
Right.
you have enough money that you can do what? And then at that point, whether you work or not is up to you. It's a choice you make.
Right.
So what is happening is a lot of people, so when, you kind of follow the principles of FIRE, you're able to retire at 30, 35, 40, where you have enough money for the rest of your life. And then you're able to kind of, do what you want with your life.
Right. And what is your opinion on investing in art in general?
So again, similar, I don't understand art as well. So I think if you have either a good advisor or you understand art, then you can look at it. But because see, again, it's something that's not as liquid versus any other asset which you can just easily go and sell today, get the cash. So I think liquidity is a slight concern. Also, ideally buy art pieces that you like. So even if you cannot sell it, at least you have something you enjoy around you.
Right, right. Sal, there are so many financial products in the market right now. Pure debt, pure equity, mix of debt, equity, so many permutations, combinations. There are so many companies that are offering so many different products. For a lay person who doesn't understand investments and understand the stock market, what would you advise them to do? I know you would say probably, consult a financial advisor. How do we know a financial advisor is giving us the right advice? And how do we know how good our money is and how good, our investment is with a particular advisor against the other? What is the criteria that we should look at?
So I think first, one of the criteria you should look at is how are they making money?
Okay.
And what are they making money from?
Okay.
How transparent are they to you on that aspect? Okay. For example, if you're paying them a fee, that they're kind of working on your behalf. Or if they're very transparent saying that, hey, these are the products, this is what I think you should do, and this is what I earn out of it. So I think that is one point. Secondly, is also when you talk to them, okay, you get a sense of what is their subject domain, their domain knowledge. Right. How much do they understand, and not just understand, but how much are they able to explain to you the product?
Right.
Because it's very easy to make a product sound complicated and not have the client understand what they're investing in and kind of promise high return. Thirdly, if someone is guaranteeing you a return, stay away from that person.
Oh, really?
Very few products have a guaranteed return, or maybe bank FDs, a few other FDs and stuff, government bonds, but most products do not have a guaranteed return, and there's always some element of risk. So, any advisor who kind of takes time and takes you through all of these factors, I think that would be someone who is a good financial advisor. So before you go to somebody, ask them a few questions, see how comfortable you are with them, with their answers, what they're saying, and then kind of go ahead with that.
Okay. And what are SIPs, and how, should we be investing in these, and what is the percentage of our income that we should be putting away in an SIP?
So I think this is a very good question, because, you have a lot of people who come and tell you, okay, here, I want to put 1 lakh in an SIP.
Yeah.
But what people don't understand is an SIP is a process of investing. It's basically a systematic investment plan. So it's a process by which you invest. It's not a product.
Yeah.
So just to give you an example, I don't know if your mother did this, but a lot of Indian women had this habit. They would pay a small amount to the jeweler. No, they would pay a small amount to the jeweler every month. Okay. And then after 11 months, the jeweler would give them X amount of gold, for that. This is the first, I think, instance of SIPs in India.
Right.
So the idea is, see, every month we pay bills, right? We're paying gas, electricity, mobile, but we're not paying ourselves. We're not investing in ourselves. Yeah. So an SIP helps you be disciplined to take away a certain amount of money for yourself.
Right.
Before you kind of spend it on other things.
Right.
So an SIP could be
a version of our mother's kitty parties, is it?
It is, exactly. Yeah.
I get you get some return on the SIPs, you get zero return on your kitty money.
Exactly.
To put it as a lay person, because I've always wondered, what is the point of going on giving an X amount to other women every month? But you don't understand, I get so much at one chunk. Yeah, but you're paying for all. It's not increasing. It's not reducing. So what's the use, So I think that's a very, I've never understood that.
Maybe they should put that monthly kitty into the markets and then, kind of take it out and get something on it.
We should issue SIP, systematic investment plan. Okay, what have I left out? Yes, bank deposits, bank accounts, fixed deposits, and the safety of them. And I know people play safe with how much of that should be in fixed deposits and how much should you really play around with again? What is your opinion?
I think if you're very risk averse, you don't want to take too much of a risk, then fixed deposit can be a good option for you.
Okay.
The great thing is that obviously you know what interest you're going to be getting when you're putting in money. So there's a fixed interest as well. Okay. The only problem with fixed deposit is, first of all, say you're in the 30%, you're in the higher tax bracket.
Right.
You're paying tax on the interest every year. Now, whether your fixed deposit is for 1 year or 5 years, you're paying tax on the interest every year.
Yeah.
So, even if you're getting like, say, a 6% interest on your FD, supposing which today or not, but in case if you do, then, that would just work out to maybe around 4%. What you'd get in hand would be, a little over 4%, right? So and secondly, also if you break the FD, not only do you get charged a penalty, but you also get a much lower interest rate.
Okay.
So say, if you broke it in 3 months and the 3-month interest rate was say 4%, so you would get 4% minus 1% penalty. So you get 3% minus the tax on that 3%.
Okay.
So it's not very liquid. But right. If you're risk averse and you don't want any kind of volatility, any kind of risk, then it's a good option. Again, when I say FD, I mean top tier banks, and preferably not cooperative banks, or not any banks where you're not sure of they're not sure of how solid they are.
Correct. But these days, even the banking systems, right? It's scary with so many banks folding overnight, almost Yes Bank, Punjab National Bank, Templeton Funds. It is scary. So where is your security that these investments are safe? And a lot of people's lifelong savings have been put in this, and then again it brings you back to the discussion that people then just prefer to hold on to cash and keep gold at home. So what about the faith that we are beginning to lose in this banking system? Things that you expect will never collapse and never. What is your opinion on this?
I think you're completely right, because there has not been enough transparency in the industry. So people thought that they were investing in X, or the bank was like solid, but it actually turned out to be it was not. So I think lack of transparency is a big issue in the system. When you come on the investment front, that is a risk that you take. So see, your return is proportionate to the risk that you take. The higher the risk that you take, the higher the returns you would earn. So I think the debt portion of your money should be in anything that's as safe as possible.
Okay.
Because your risk is not meant to be taken on the debt side. Your risk is to be taken on equity. That's where you take the risk. That's where you kind of, right. I think broadly, if say we look at, for example, FDs, any good top tier bank, maybe the top 5 private banks and a lot of the PSU banks, because they're backed by the government, are broadly safe, even though the limit is 5 lakh per deposit, but broadly they are safe.
Yeah.
You also have a variety of government schemes that are there, which are again very safe because it's a government scheme, so you don't fear losing money. Okay. In terms of, say, you mentioned Franklin, so in terms of debt funds, I think this was a very rare aberration because, this is something that has not happened in the history of the industry. Correct. And this was propagated, obviously, with something like COVID. I don't think anyone has, ever seen anything like COVID where entire countries, not one country, not a particular, where everything has shut down. So I think that is an aberration, and obviously, there were various factors that kind of led to that. But I think broadly there are segments of the debt markets which are safer.
Okay.
There are segments which are not. So you have to make sure that you invest in the safer segment.
And a good advisor is the best person to guide you on this, right?
Yeah, because that person will also take into account what your needs are, right? They'll also take into account what you want to achieve. So then they can guide you. Also, they're kind of keeping track of this day in and day out. That's their work. So they're able to keep track.
Taxations on investments, but there are a couple of questions I think we should take. Somebody's asking that do you think we'll get to a cashless economy by 2030? And if how you think this cashless system will affect us. Do you want to take this question?
Sure. So I think while we're moving to a large portion, where we're moving to cashless, I don't think we're going to be completely cashless.
Right.
I think India, okay, let's just take an example. Yeah. Like after demonetization, everyone thought that, okay, now we will become, everyone's using ATMs, wallets, etc. Now we become more cashless. But everything to a large extent went back to the same thing. Things you are paying for in cash, you're still paying for in cash, right? Because there needs to be a lot of education also to convert it to cashless. Right. So while a lot of people understand the advantages, not everybody does. So I do not think that we will be anywhere close to being completely cashless in 2030. I think higher percentage from where we are now, yes, of course, because people are realizing the benefits of that. Yeah. But yeah.
The demonetization, I think, was a very optimistic move, and it's most unfortunate that it failed so badly. Otherwise, it would have really, taken our country to another level in terms of moving to a cashless economy, more people into the tax fold, and so many other ways. But unfortunately, there's as much. Clearly, there's more black money circulating in the economy than there was earlier. FIRE concept, is it too late to start at 35 for someone who needs to do this? Jui is asking.
So I don't think it's ever too late to start. And I think this is something that I really, really emphasize on. Don't wait till you have lakhs of rupees to start investing. Even if you have 500 rupees, you can start today.
Yeah.
The amount that you start with is not as important as how early you start and the amount of time you kind of spend. Right. So not too late. Definitely start.
Nice, nice. And also, I think there is that saying, "Na boon boon se ghada banta hai." So at some point, you have to start saving. Can you
Yeah.
recommend banks that are safe for FDs? Which ones do you think are safe for FDs?
So I think obviously your tops are like HDFC, ICICI, SBI, Kotak Mahindra. These are broadly safe. You also have HDFC Limited, the company which gives out loans, which is safe for corporate FDs. You have RBI bonds from the government, which
Yeah.
is again extremely safe. So these are some options. Also, as I mentioned, PSU banks. So if
Right.
you're getting good interest rate, you can look at PSU bank.
Right. And also, do you believe that the government banks are safer than private banks in this environment in India? Do you, with all that's been happening with the private banks and them collapsing? Sorry, I lost connection. Can you hear me, Sal? Hi. I lost connection. Connection. Guys, in the meantime, if there are questions you want to ask, I'm just going to add her back in. Is there anyone? We're just going to add Sal back in. I think we lost connection with her. Are there any more questions you'd like to put in? Because we have our last few minutes of the chat left. Sorry, we lost you.
Sorry.
I don't know if you heard my last question that government banks versus private sector banks. Uh, do you believe government banks are safer in India in this environment?
Government banks are backed by the government, right? So they are the safest that can be, of course. Private banks offer you more services and benefits. So I would recommend a mix of both.
A mix of both. Okay.
Yeah.
So I'm going to leave the open forum open for questions now. If there's anything anyone wants to ask, please do so. In the meantime, if there's any more information you want to share, you feel that I've left out that you want to talk about. And in the meantime, I'm going to ask you a very, very lame person. Total, how many investments can we do? What do you mean, how many investments? It depends on. Please clarify your question, Aishu. In equity, what funds or schemes do you recommend? Equity, FD, and STI. What is STI? I think she means SIP. I don't know.
Or STP maybe, I think.
Okay.
Okay. So I think in terms of I think there was a question on equity or which schemes or which funds. So basically you have two options. One is you kind of invest via the mutual fund route, or you invest
Yeah.
in direct equity.
Direct
In the
equity. Yeah.
mutual fund, yeah, again now it depends on your risk level. So say if you're more aggressive in terms of the risk, then you can also look at small cap, like companies which are smaller in size. If your
Correct.
risk level is lower, then you would only look at large cap, which is the top 100 largest companies of the country.
Right.
People also really like direct equity because you have the stock in your demat account. You can kind of look at it, track it, etc. So I think that is also a great investment as long as you can monitor your investment, or you have a professional who's kind of looking at it and monitoring it.
Yeah.
So, for example, we have a quant-based strategy that we use, which aims to beat the markets and generate an alpha every year. But here you know that there is someone who is tracking it and monitoring it. So if you're looking at doing it yourself, make sure you understand what you're investing in it and that you can monitor.
Right. Right. What are the new summary of today's live? What are the new investment instruments like REIT? Do you want to take that?
So REIT is basically a real estate investment trust, which is something like a mutual fund but for real estate. I think in concept, it's a great concept. In India, it's still a very new product, and I think there's been only one or two products in that space. So it's really too early to kind of tell how that will pan out.
Okay.
But conceptually, I think it's a great product.
Okay, someone's asked how to offset a loss in stocks. On that note, actually, there's also something I had in my mind. Is there any advice for people you have who are heavily invested in stocks and whose stocks have crashed during this COVID. I know they always say that it's a game of long run and that you stay invested and you don't pull out and panic. But we've only seen it go down, down, down. When do you think it's going to turn around? And would you still suggest and advise people to stay invested and not to pull out of the stock market right now? What is your advice during COVID?
I think actually that's one of that's one of the biggest ironies of the COVID period. Everyone thought the market could crash, and then people went when the market crashed, they went and sold their stock.
Yeah.
And then since then the market's gone up 30%. So it a lot of stocks are actually higher than pre-COVID levels.
Right.
So I think one of the most important things, according to me, is not timing the market. It's
Right.
not trying to kind of decide, okay, I'll put money today or tomorrow. But it's time in the market. So how long you stay invested matters more than you trying to move in and out of the market, because a lot of times you can't predict it. And if you miss out those few days when the markets have really moved, your returns will actually take a big hit in you trying to time the market.
Right, right. Sal, I think there are a lot of questions, but we're also running out of time. I think what we should probably do is do another independent chat where we'll only have a question answer forum. If and when you have the time, for all our viewers who are logged in right now, we will definitely attend to each and every question of yours. But let's do that on another day. Let's do a session where we do only question answers. Feel free to ask whatever you want in terms of investments and stocks and financial advice from Saloni. And I think we should wrap that for now because it's almost 4:40. We've way crossed our time limit. I don't think we even realize how fast the time has flown. Thank you so much for being on my chat. It was most informative as always. And I think I'm thoroughly enjoying doing all of this. Thank you very much to all our viewers for being on the session today. Just to keep you clued in, Thursday we have a session coming up, which is basically, I forget what it was. Yeah. So, but I know it's a very fun. I'm going to post it. I've got such a lineup. I've forgotten which one is this Thursday. This is really crazy. Thank you guys though for being here. And I'll see you soon. Please write your comments, your feedback. This session will stay on our IGTV page. If there's anything you want to know, we are happy to forward the questions to Saloni. Guys, I would also highly recommend that please get professional advice and engage a wealth manager for your investments. It would just be safer to do it with them. They know what they're doing. And yes, we'll see you on our next chat on Thursday. Yes, ancient wisdom during modern times. I finally remembered what we're doing.
Great. Yeah.
Subject because it's all about going back to our roots and what are Vedic astrology and what, not astrology, but basic what are Vedic lifestyles, our books prescribe, and how we're going back to that lifestyle and how to incorporate that in a modern life. So I think that's a very interesting chat. Thank you very much, and I'll see you soon. Thank you.
Thanks. And I just wanted to leave this with one last thing, I think, because there were a lot of questions that we couldn't take. I think if you go to a website, mywealthguide.com, that's mywealthguide.com, you'll see a lot of tools and stuff which will kind of help you at least start your journey as to where you should start, what you should do, what you should look at. And then you can always write into me for anything more. And we will definitely do another session where we can take a lot of questions and stuff.
We should. Maybe we'll come up with more specific subjects so people can keep asking what they want to ask. But
Sure.
the website on the chat. Thank you so much. Thank you. Thank you for logging in.
Thanks, Aanchal.